Hello, everyone. Welcome to the market update here for Tuesday, February the 28th, last day of February today. As always, if you have any questions during the week or any questions that I don't get to here in the live class, make sure you send those to jerry@traderspro.com. Also, if you could check the audio, if you notice any clicking in the audio or any obnoxious noise in the audio besides my voice, then let me know and I can dial back in. If it's my voice, it won't matter if I dial back in. It's going to be annoying the whole time. Sorry about that. But yeah, if you notice anything in the audio, let me know. I can try to clear that up. Also, I'm going to be out of town next week. And so I'm only going to be doing one of the classes. It'll be a market update / stock specific class. We'll do a market update and have some stock picks. I don't know the day yet. I don't know the day yet, and it'll probably be at an earlier time in the day. So I'll try to get that information out on Thursday. I'll have a little bit better idea of what my schedule will be like next week by Thursday. And if for some reason you're not able to attend the live class next week because of the change, just remember it's always recorded and you can access it. And because I'll probably do it earlier in the day, you'll be able to access it before and probably view it before the market closes and all that. So and that's for next week. And like I said, I'll have more details on that on Thursday as I get to know what my schedule is going to be for next week. All right. Now, as far as what to talk about, I mean, we've now been a couple weeks where there's not a lot to talk about. We're just kind of, the market has been indecisive. It starts to look like it's making a move in the morning and then fades in the afternoon, or it looks weaker in the morning and stronger in the afternoon. It's just kind of all over the place, and it's kind of hard to gauge the direction. I'll show you that when we look at the charts here. As far as the direction alerts, we're not at any extreme level here. We haven't been for a while, so there's not much to look at here. Momentum's right in the middle. What that means is it could go either way. We could, as you'll see when we look at the charts, we could move higher from here. We could break down from here. And all this is telling us is that, there's room to move whichever direction it decides to go in. Like I said, the market's been indecisive lately. When it does decide where it wants to go, it could drop and this could become more oversold, or it could rally and become more overbought. The bottom line is it could trend from here either direction, and it's not near an extreme level. And so when we're in those conditions, we tend to focus on how the chart is behaving right now. Is it breaking above resistance? Is it breaking below support? The daily candles, how do those look? We start focusing a little bit more on that until we start to get into a stretched condition, up or down. Brett, same thing, right in the middle. Sentiment's been extremely complacent for quite a while now. One other thing I on the long-term trend, I told you to start looking out for is if we do rally higher, if we do see the market rally higher, we'll start to see this long-term indicator, or it's right around the 5 level. That's one of the reasons why we've been rallying, but this has been stuck at the far left side of the bear market range. If we do start to see the market rally, what you'll see is this will start to move finally. It hasn't moved yet, but that's because we've been really in the bear market condition. So from this standpoint, we're starting to trend in the right direction. And if we do continue to move higher, we'll see that start to move. This doesn't move very often, so when it does start to move at all, we'll start to point that out. But again, that's why it's a long-term indicator. Long-term indicators are never going to show signals every day or something significant every day. But when they do, we want to be able to pay attention to them and make sure we're recognizing that. And I'm just preparing you for that. If you're wondering why we've been rallying and haven't seen this move, well, that's why we have these numbers right here. You can see when it should start to move, and now that we're near that 5 level, that -5 level, it should start to move off that far left side. Buy-sell ratios, again, we've seen the sells outpace the buys a little bit, but not to any extreme wide level. We can also look, another thing to keep an eye on too, this indicator below it, we don't always look at it, but if you're wondering how you can apply this, it's a real simple way to apply this. This is showing you the buy-sell ratios of of all the stocks that are trading. When it's below 1, so right now we're at about 0.33. When it's below 1, you usually don't want to be adding too much to the portfolio. And this is what I've been saying for weeks now. Whenever we have our Thursday class, I'll say, hey, I got to give you some ideas, but it doesn't mean go out there and buy all of these and load up your portfolio. If you look at my portfolio, and especially after last week, I stopped out of the gold stocks. I've only got a couple of stocks in there that I'm holding. And in a condition like this, you can still add something, because you can find a chart that's really doing well or a sector that's doing well, and you want to make something during bear market conditions if you can. But what you don't want to do is start loading up, because you can always find 6, 7, 8, 9, 10 stocks that look really good. But the rule of thumb in this game is allocation. You don't want to be fully in bear market conditions. It's just dangerous, because the markets fall a lot faster than they rise. One of the things I keep coming back to and warning about is that we never got that panic sell-off to flush out all the sellers in this last decline over the last year. We're still in danger of that happening. Now, I don't see it in the near term from what I'm seeing. So I'm not saying that that's still going to happen. It may not. This may be the first market bottom that I've ever experienced, a major market bottom that didn't have a panic sell-off. That's always a possibility. But because it's still out there, that we could drop. Imagine if you're all in right now and you've got $200,000 in the market, and suddenly you wake up and the Dow's down 2,000 points, and then goes down another 3,000 points over the next week or so, or something like that. Man, your 200,000 is now 50,000, and then the market bottoms, and that's when you want to pile in and make your big money, and you don't have the money. You got wiped out on that big panic sell-off. So how do you avoid that? Well, this is one of the signals that can tell you where the danger is, that you don't want to be too loaded up in your portfolio. If that buy-sell ratio is below 1, it's just not a good idea. Now, it did go above 1 back here in January, and you could ask, well, how come I didn't get into too many? I did add in January and February. We did start to put money in. We had almost nothing in there during December, when it looked like we were going to have that big sell-off in December. We did add as this thing started to move up, as the trend started to move up. We did add some things, but again, because we're still in a bear market, you don't want to be too aggressive. We want to be patient. We're not interested in trying to pick the bottom. We want to make sure that we've got a nice bullish trend, and we're coming out of that bear market before we start to get more aggressive. So keep an eye on that. Again, I'm still okay with adding a trade or two into that portfolio, but I don't want to get into adding 4 or 5 stocks until that buy sell or something like that, until that buy sell ratio gets back above 1. So that's just another thing that you can kind of keep an eye on or look at. You're not going to look at that every day necessarily, because this is not going to change usually dramatically every day. Although if you had a big rally day, you could see a lot of stocks going from hold to buy and changing that dynamic a little bit. But that's something you can kind of add to your analysis there, or your routine if you'd like. Another thing you could do is if you go into the index tab right here. This is another thing I've shown you here is you can start to see when you get to some of these extreme ratios here. Overbought would be if the ratio is in double digits, 12-1, 14-1, or something like that. What that's telling you is the difference between the buys and the sells. Right now, you've got more sells than buys in most of these categories. And when you get down into the, for instance, the S&P 500 is at a 0.19. You've got 207 sales versus 39 buys, and the whole S&P 500 index. That is a little bit of more of an oversold condition, and so some of these indexes are showing a little bit more of that oversold condition. The only thing is you don't want to be just getting in because the market's oversold. It can get more oversold, but this is looking like the market could possibly be setting up for another rally in the near term. The fact that it hasn't dropped after breaking some of the support levels lately, again, I'll show you this when we look at the charts, tells me we're probably going to rally up at some point in the near term. There's when the market gets indecisive like this and you're getting low volume days, we had a lot of these low volume days. You don't usually see that ahead of a big drop, unless the market's been rallying and then suddenly you start to see lower volume and the rally where it tells you the rally is slowing up. We've had a pullback where now the volume is now slowing up, which actually is telling you that the sellers they're not aggressive right now. They're not there. That usually sets the stage for the market to rally a little bit. We're at some of these extreme levels. We're getting to extreme oversold levels, at least on the buy-sell ratios here of the indexes. Like I said, they could become more oversold, but it just has a feel of a near-term, a little bit of a near-term rally. I think that's coming. I don't know when that is because the day-to-day price action lately has been pretty weak. Not a lot of strong closes happening. Let's take a look at the charts and let me show you what I'm talking about. Let me go to a 3-month chart here to zoom in. And if you remember, started last Wednesday. You had a pretty definitive move down last Tuesday right here, closed near the lows of the day. Wednesday was an indecision day. You can see a little bit of that spinning top candle formation. And then on Thursday, we were talking about possibly forming a hammer formation, which we were. We had opened up here, we gapped up, we traded all the way down to here, and then we were coming back up. We were starting to come back up. I can't remember where we were in class because the market was still open, but I said the way it was trending, it looked like it could have a little bit of a hammer formation, which tends to be a bullish formation. But the problem I mentioned in that Thursday class is where it's forming. You like to see that form, you actually like to see the market gap down after a drop like this, and then form that hammer formation. And you like to see it close higher than where it opened. That's usually the strongest. And at the highs of the day, close at the highs of the day, that's a much stronger pattern, much more likely to see a move higher off of that. But that's when it gapped up and formed it right like this. It's a weaker hammer formation. Not to mention the fact that we were off the highs of the day. You have a little bit of a tail up here. This is a pretty weak hammer formation, so it's not surprising that Friday we dropped lower. Again, we tried to form another hammer formation right here, and tried to form the hammer formation that I'd like to see, where it opens lower, trades down, came all the way back up. It looked like it was at the highs of the day, and then in that last 10 minutes or 15 minutes or so, it faded into an indecision candle. So again, there haven't been these confident closes with some of that price action. Now, these are real subtle things that you're looking for, but they're clues. These things you need to pick up on, because most people out there that don't know how to read price action aren't noticing that. And if they're not looking at it at the end of the day, if they're looking at it a half hour before the market closed and they're saying, oh, there's a bullish hammer, the market's going to go up from here, I'm going to load up right here. That's not the way it looked at the close when it faded a little bit. Now, sometimes this will happen and it's not your fault, because at some point in time, you've got to make a trade. I've seen this happen where it looks like a hammer formation. There's 2 minutes to go before the market closes, and then the last 2 minutes it fades like this, and then it totally looks different right when market closes, and you had to make a decision to get in. That'll happen from time to time. Normally, it doesn't happen very often. In fact, what'll happen usually more often is, or one way they usually tell that the pattern is a little bit weak, or the price action a little bit weak, is if you're watching it during that particularly the last half hour of the trading day. If it keeps dipping down quite a bit and then going back up to the highs and then dipping back down again, usually that's a sign there's indecision there. When it's a really strong hammer formation, what will happen is it'll hold during that especially the last 15 minutes of the market day. It'll be right at the highs of the day. It may fluctuate a little bit, but it's usually holding at or even building on that. You'll get that momentum where it builds into the end of the day. And so if it's going back and forth, fading quite a bit, and then going up and then fading again during that last half hour, that's usually a sign that it might close a bit weaker. And even if it does close strong, I'm always a little bit nervous that it's going to be a true pattern or true candle formation for the next day. By the way, again, these patterns don't always work. I mentioned before that there was this bullish hammer right here that failed. Now, part of the problem with that one, if you remember back in the previous update, was that if you're looking at this as wave A, wave B, wave C, ideally you'd like to see a bullish hammer at the end of a wave C. The problem, though, is that this hadn't gone beyond the end of wave A. And usually with your ABC patterns, your wave C is going to go lower than the end of wave A right there, distinctly lower. And so again, it was one of those things of where it's happening is there's a little bit of a question mark of where that's taking place. Now, I need to clarify something. It doesn't mean that an ABC pattern wave C can never end at the end of wave A. Hopefully I can clarify this a little bit. Typically your ABC pattern, you'll get wave A. Wave B will usually not come all the way back up to the start of wave A. Usually wave B is a partial retracement of wave A. It'll come up here around this area right here and then complete. And then wave C will typically go beyond the end of wave A. That's kind of the textbook ABC. Now, if you get wave A, wave B, and then wave C is right at the end of wave A right here, usually that's not going to be the end of wave C, even if you do get a bullish candle right there. Usually it's going to dip down a little bit further. And again, this is also where you can bring in that wave A, wave C relationship. Typically, the ABC pattern will complete when wave C is about the same length as wave A. So does wave C look to be about the same length as wave A as well? That's something you can look at. That tends to be that helps you better gauge when these corrections could be getting close to being done. The only time that you'll see wave C end at the end of wave A is if you have what we call a flat ABC, where you get wave A, and then wave B comes all the way back to the beginning of wave A, not usually, and the rare case it could go a little bit beyond that, but the very rare, we call those irregular ABCs, and they're very rare. But that be wave B, and then wave C will very often end at the end of wave A, and it kind of creates that sideways channel, that sideways or a flag pattern. If you're familiar with signature chart patterns, it'd be more of a sideways flag pattern or something like that. But you'll notice if this is wave A and this is wave B didn't come all the way up here to the top of wave A. So again, when I see that little bullish hammer, is it possible? It is possible. You have to respect that it's possible. It could have rallied off of this point. But I've been in a number of these trades. This is something I kind of had to learn the hard way, is that you get excited. You're like, oh boy, that looks like a corrected pattern. This looks like wave A, wave B, wave C. You got a bullish hammer. This thing's going to go up, and then it has another move down. And I've been stopped out of a few of those trades, or just lost money on a few of those trades where it had another move down. So that move was not surprising to me that it did that. And to be honest with you, we're not seeing a lot of strength down here. You got an indecision day on, like I said, on Friday. Yesterday, you opened stronger, tried to rally, and then faded into the close. So that was a bearish reversal candle. But even then, it came off the lows of the day as well. So it acted as more of an indecision day. Yes, it was a little bit of a bearish reversal, but it also brought in some indecision with the fact it couldn't close at the lows of the day there. And then today we opened lower. We're trading higher. We have little tails on both sides. I will say that it's been acting a little bit stronger today. We'll have to keep an eye on volume. Volume's been really light, or fairly light the last few days. Not necessarily on the indexes, but especially if you look at individual stocks, there's been a lot of light volume days. And I don't care if that candle is a bullish candle or a bearish candle. If the volume is really light, you can't really trust the candle, the price action. And there's just been a lot of indecision. Now, overall, you could say, this goes back to what we've been looking at, which is, this could be a bullish ABC pattern. We could have another move higher. Let me back out to a bigger chart here. Go to a 2-year chart. So again, this is back to where we could go either way, but it could be that this is that you've got a higher high, higher low right here. It could be that this is, like I said, this could be a bullish ABC pattern. We're right at about a 50% retracement of that move up, maybe a little bit more than 50% retracement. So this is an area where if it's going to start to go higher, it should go higher in this area. If it starts to dip down a little bit further, you're now retracing a little bit too deep. The probability start to diminish for a rally and become more likely for a drop at that point. But if the market is going to rally from here, all along I was expecting the rally to get up closer to this area right here. I still think that we're going to roll over at some point and get a bigger move down, but it doesn't have the feel that it's going to happen right now just because of too much indecision right here and for too long. The market probably needs to get a little bit more conviction in the crowd. When the whole crowd can't tell whether they're bullish or bearish, that's what happens. You stagnate. You don't go anywhere, and it sucks as a trader when market conditions set up like this, because there aren't really strong moves. It doesn't mean that moves don't happen, but the moves that happen in these conditions are moves that you have to get lucky in. This company came out and upgraded this stock today and it's up 10% for the day, and you're like, man, I would have loved to catch that. I would have made a lot of money on that. But the only way you would have known is if you had inside information that they were going to upgrade the stock, or they come out with an announcement that they're going to buy a company, or a company is going to be acquired. Again, you'd have to have inside information there, or just get lucky that you were in the trade at the time that news event came out. So you're still hearing big moves happening. And if you, all you have to do is tune into one of these financial channels and they'll tell you the big moves of the day of these stocks. So Microsoft just making a big move or something, and that, it didn't, but I mean, they'll be focusing on that and talking about it for almost the whole day. But the problem is your odds of getting into one of those are really low, because unless, and even if they do have a bullish or bearish pattern, again, unless you pick that bullish pattern out of 10 other ones, you didn't get the move. You have the other 10 other stocks are stagnating. They're moving up a little bit or down a little bit, but they're not really taking off. When you know you have a great trading environment is when there's lots of stocks participating, where you get a bullish day in the market and a lot of stocks are making big bullish moves, or a bearish day in the market, a lot of stocks are making big bearish moves. Then your odds of capturing that go way up. You know, sure, there can still be the stock that makes the 10% move and yours only makes a 5% move, but you're getting a lot of stocks making big moves, and so your chances of getting those big moves goes way up. And so that's what I like to look for. That's when I really try to get active in trading, is when I start to see that, because it's pretty obvious why you would want to get aggressive then, is because that's your odds of getting those bigger moves goes way up. And even if you don't get the big move, you get a pretty big move, which is fine as well. So we're getting the opposite right now. And you get one stock that makes a big move and 10 others that are barely making any move at all. So the longer term still outlook that I'm kind of leaning towards is that this is just wave A of the correction. This is A, B, C, and we're still working on C. And whether that's A, B, C for wave B, or whether it just ends up zigzagging, choppy looking up into this area right here, however it kind of plays out, I'm kind of looking at this as A, B, and then maybe we get that bigger decline, which would push the bigger decline probably out to, well, it'd make more sense if it was in May, past the April earnings, although it could be that the April earnings is when we start to see the weakness in the economy. We started to see a little bit this earnings season. You know, some major companies missing a little bit, and having pretty bad quarters. Google had a bad quarter. Microsoft wasn't great, or at least as great as people were expecting. So, you know, if you're trying to look out at what could trigger, you know, a bigger sell-off, that might be what, you know, the time period there, especially as we're moving into March. You might get March, April, maybe mid-April. Well, mid-April is when earnings will start, so we'll see. I don't get too caught up in that, because, you know, I only get caught up in that as far as looking at the trigger. What could be the trigger that could create that? And by the way, I'm still not ignoring, you know, that this could be the bottom in October, and that, you know, we're working our way higher. What I want to see, though, is we got to see a more impulsive move up. This is too choppy on this rally. It looks more corrected. And let me go back. You can see what I'm talking about. We want to see something that looks. Oh, we can't go back. We're already at a 2-year chart. We want to see something more like this. Maybe not necessarily that extreme, but we want to see more of a definitive direction, as opposed to this choppy, corrective type look. And again, that could start to happen, and if it does, then I'll definitely start leaning more towards, you know, expecting that maybe the bear market could be over. Dow. Now the Dow, a couple things on the Dow. The Dow has been underperforming the other indexes a little bit. The first bearish sign, near-term bearish sign on the Dow was we have this little trend line right here that we broke. Kind of broke it right there. This is a little bit of a bullish pennant pattern. We wanted to see it break to the upside. It broke to the downside. That doesn't mean that it's now, I mentioned this too, it doesn't mean that it's going to come all the way down here. The next area that we're going to focus on is going to be this support. We hit it Friday. We'll see if it holds. Now, the Dow is down today with the other indexes. Some of the other indexes looking a little bit more bullish. If this breaks below here, though, that's not a good sign. You'd want to see this hold as support. So that's something we'll be watching for this week is, does this level hold? But, the bigger picture, that whole Dow move does look a lot more bullish. You back out to a 2-year chart. This did have a very impulsive move off those October lows. This looks corrective. Whenever you see a stock moving sideways, pay attention to the direction it's moving in before it moves sideways. That's where it's more likely to go after it's done moving sideways. The big question is when it's done moving sideways. We don't know that yet, but that's something to kind of keep an eye on. The bigger picture chart on the Dow does look more bullish than bearish to me. And it could be, by the way, it could be that we get a big sell-off where the NASDAQ and the Russell and the S&P break below the October lows and the Dow manages to hold on. Maybe it comes down to this area right here and holds on. I mean, all the indexes don't have to go to new lows in a sell-off. But again, all that's kind of down the road a little bit. NASDAQ 100, this looks probably a lot more bullish than the other charts. We're still below this little breakout area right here. We kind of we broke out above it right here. We kind of, when you pull back to it, you want it to act as a little bit more support. We're still beneath it. You can see we tested it a little bit yesterday, but closed lower, had a bearish candle yesterday. Today we opened lower, moving higher, a little bit more of a bullish candle. What I want to see is at least a couple of days in the same direction. Let's get 2 or 3 up days in a row, or 2 or 3 down days in a row to get a little bit of conviction there. This bullish candle, bearish candle, bullish candle, bearish candle alternation is not good. You can't have a lot of confidence in that price action. But this chart, zoom out a little bit. That run off of the January lows looks a little bit more impulsive. Again, this looks pretty bullish if it could hold this area right here and start to move up. And so again, that's what we're watching for this week. All right. Russell, same thing. Again, with this looks like a bullish ABC pattern, and we're within the retracement zone of this move up. We're right at the breakout area right here. It's actually back above it on the Russell. The key today is to see how we close and to see the volume of the day. Do we have I'd like to see the volume bar be back up in this range right here, and I'd like to see it close at the highs of the day. If it really fades again like it did yesterday, or it has yesterday came off the lows a little bit at the close, but if it ends up having a big tail, kind of like back in here where it drops all the way back down or something like that, that's not good. That's showing that the market is still really indecisive. All right, bonds. We're still kind of focusing on this low right here on bonds. If we break below that, you're probably now looking at retesting lows here, and you could probably see a bigger market sell-off if the bonds break below that low. Now it's been kind of holding sideways, and again, we're seeing indecision everywhere. We're seeing it in the bond market, we're seeing it in the stock market, we're seeing it in the dollar, we're seeing it, and so somewhere we want to see some conviction in a direction there. So that's what we'll be watching this week. Does this hold? Do we see bonds rally off of that? We could still be in just a big sideways range, where we work our way back up into here. Maybe we break out if it works its way back up again, up into here. This is going to be a key low to watch, and I wouldn't be surprised if the market had a big reaction if it dropped below that low. Again, we're not the only ones seeing these charts. Some of the best traders in the world are looking at these as well. And the ones that really can move the market are looking at these as well. Pretty good move up today in gold. Of course, after I've stopped out of my gold trades, it's probably going to go on another run here. We'll see if there's any follow through to that. Again, you want to see how it looks at the close. If it faded into the close, that candle wouldn't look as strong, but a pretty decent move. But we had one right here that fizzled a little bit. So I'd want to see a few more days of that. Now, if it can start really taking off again over a few days, I might consider getting back in. I do think gold, when you look at that long-term chart, there's just such a long-term potential. Boy, I can't even go back far enough on that to. Let me go back. Let me show you again, for those that are kind of new on this. I'm going to go to my other charting service here real quick, because I can do this a lot faster. I can go to a monthly chart here, where we look at a really long-term chart. This is going back several years, and you can see that you've got this big, large cup with handle formation. And then you can also look at this near-term bullish move, and this looks like an ABC correction. And we're close to breaking out of that. And if we break out of that, again, rule of thumb, you can go to the top of the bull, the bottom of the bull, project that upward. This could be an historic move, potential historic move for gold. Oh man, I don't know how to switch this thing back. Anyway, so that's so if you're wondering why I'm a little anxious to get back into the gold trade, why I was had such a wide stop to begin with, that's kind of the reason why. And but I'm not just going to be in a trade just to be in it, just assuming that not all cup with handle patterns end up working out, and so you don't want to just get tunnel vision and assume that's what's going to happen. And if you want to, you could wait for the breakout. Wait till it breaks out above that long-term trend. That could be a little while here, but wait till it does that before you get more aggressive with it. And I wasn't very aggressive with it. I had a couple trades there during this run-up that we had, this previous run-up. Oil, again, I told you to keep an eye on, this area right here. A lot of support in this area right here. It seems to have held true, but overall we're sideways. So we're just kind of focused on this range. We're kind of stuck in this range. Although there are some energy stocks that pull back recently that if oil does trend back up to this area up here again, they could be bullish in the near term, especially if the market starts rallying too. It could show. So you want to take a peek at some energy stocks. And I think there's a couple there's a couple that I'll have today that I'll show you that I like off of the new buy list. The dollar, again, recently it's been a little bit more sideways, although I think what was significant that happened on what was significant Friday was this is a significant lower high within this downtrend. Trying to rally, it failed, it went to a lower low. And then it had this sharp move up. We're wondering during this, is this a trend reversal? You have a kind of an impulsive down, impulsive up, corrective. That looked like we should go higher off of that. We did. And then now we broke to a higher high right here. So it's acting, the dollar is acting like it's moving back into an uptrend, which would be bearish for the market, at least the way the market's been reacting lately. Now, that doesn't mean that we couldn't see the market rally in the near term. You've had a pretty good run off the lows right here. Could you see a little bit of a pullback in the dollar? And then it goes higher. And if it pulls back, that could be bullish for the market near term. Yeah, that could happen. It did break out and came right back down. It's up a little bit today. And that's something to watch at the close as well, is if the dollar is holding its strength. Do you see the buying today fade a little bit at the close? It could be. But the problem is that like I said, we're seeing kind of this indecision all over the place and everything that the market is kind of focused on right now. The VIX, this is why if the market rallies from here, I don't know that it's going to rally very far, because the VIX is already down at 20 again. We're back down to 20 again. Had this little pop right here when we started to sell off a little bit weeks ago, and we're right back down to 20 again. It could come down to 18, but that's what I'm saying. You start rallying right here, and you're right back down to 18, and then you're right back in a spot where the market could start selling off again. Now, this is another reason, though, why we're kind of focused on the SPY again right here. You know, if we did get it, well, boy, it rallied just to the previous high right here, would get the VIX back down to 18 probably. You know, maybe it makes it up into here before you get a bigger drop. But it's just going to be it's going to be a headwind to try to rally off of with the VIX down that low. It's just, and that's the dilemma. That's why all I can really see ahead is more choppiness, more sideways conditions. It's just kind of what all these indicators are kind of showing right now, and that's not doesn't look like a lot of fun. Chip stocks, again, we're looking to see if they hold this little breakout right here. It broke out, pulled right back to it. Looks like a bullish ABC pattern right here, but not going anywhere. Stagnating right here. The longer it stagnates, so you worry about, well, does it have another move down? You know, typically when what you want to see on these ABC patterns is wave C will look a little bit more impulsive. So this does look like this could be wave A, wave B, wave C. But then what you want to see is conviction. You want to see impulsive down, impulsive up. And it doesn't have to be overly sharp, but look at this. It moved down, and then it just started to take off right here. A little bit of sluggishness in here, and that's what we're wondering. This is a little bit more sideways than that was. But you want to see it start showing you something. And if it does, you can see you get a run like that, you can make some money on a run like that. You know, you get a few days where it starts really, where it's more than one day up in a row. And that's what you want to see, is some movement there. Transports, they gapped up yesterday, then we're kind of, and a lot of that was on Union Pacific. Union Pacific gapped up as a railroad stock. One of the largest in the country, had this big, massive gap up right there. I think that was a big reason why transports gapped up right there. But now we're bumping up against this resistance here. We'll see if we can get above that. If we can get above that, that's bullish. If it fails and starts to come down, now you're looking, this is a bearish head and shoulders pattern as well. So we'll see how that kind of plays out this week. Bitcoin, I like the chart of Bitcoin as far as it looks like a big cup with handle formation. You know, this little impulsive move, this looks corrective. It would just be hard if the market did sell off. It'd be hard for me to. I think that Bitcoin would sell off with it, but then the key thing there would be, does a market go to a new low and end up bottoming where Bitcoin might have already bottomed and it ends up at a higher low? That'd be a very bullish sign if we had a big sell-off in the market and Bitcoin didn't go to a lower low. Then I'd be definitely saying, you know, start looking at some cryptocurrencies, and whichever ones are the stronger ones that aren't going to disappear might be a good idea at that point. All right. So again, markets are decisive. If you look at the portfolio, I only have, I've got 2 stocks. I still have my hedge on. I might take that off because it depending on how, if the market looks pretty bullish into the close, I could see it rallying for a few days, so I wouldn't want to have that bearish hedge on there. FMC is been just stagnant. You know, we're still. I like this kind of cup formation right through. Well, it looked like a lot more of a cup formation through here. It's kind of drifted a little bit. But again, it hasn't stopped me out, so it still has that potential of taking off. You could look at this as forming a little bit of a wedge formation that it could break out of, pennant pattern, whatever kind of chart pattern you want to call that. So I don't see a reason to get out of that, but it hasn't really gone anywhere yet. We're not far. And then SGML has been kind of nice, and this one is getting close to, it's right at the breakout area right here. Again, looks like an inverse head and shoulders pattern. Not surprising that it's having some trouble breaking out. You probably need to have a little bit of market momentum behind it. That one still looks good. What I might end up doing, maybe I'll do this on Thursday, is move the stop up. I think I have my stop down below here. I probably need to move it down right below this area right here. At the very least, to make it more of a break-even trade in case it comes back down. I don't lose anything if it comes back down. And then, like I said, SARK. This is the opposite of the ARKK, ARK Innovation Fund. It's down a little bit today, which you would expect because it's going to move opposite of the market, and probably opposite more of the Nasdaq 100, because a lot of the stocks in the ARKK are fund or more Nasdaq stocks. So I might take that hedge off. That was just in case the market dropped big, looking less likely it's going to drop big, and so I'd probably take that off. Plus, I only have 2 bullish stocks in there anyway. So it depends. If the Nasdaq 100 can kind of close near the highs of the day, then I'll probably take that off at the end of the day, close that out. If it fades a lot, comes all the way down this last hour or something like that, really looks weak, I'll probably hang on to it another day. That's what I'll be watching for on that one. All right, a couple of stocks I liked in the new buys. One is this. I think I've brought this one up before. Might have this IQ. Again, nice uptrend. It's just kind of consolidating right through here. This is one of those, again, why not wait for the breakout, especially if the market can start moving up. If the market starts moving up, this should break out. Rule of thumb, if it does break out, it should go up about the same distance as the range of that sideways trend right there. So that it could get up into this area up here, around $9 or so. Now, it should go further than that, but that's kind of a minimum expectation. By the way, here's an example of that here. So here's an ABC pattern. You can do this with sideways trends or ABC patterns. You can take the top of the ABC pattern or the bottom of the ABC pattern and measure the breakout. Now this would have put it up here a little bit above $8. It didn't quite get there before moving sideways. Again, these things aren't expected to be exact or perfect, but I'm telling you, if you look at a lot of charts, it's amazing how close to accurate they are. You know, you get those corrections. It breaks out, almost gets right to where that area is, and then it goes into another correction, or it moves sideways, or whatever. It happens so often that once you see it and experience it, you start to get confidence in that measurement. Just don't get overconfident in it. Don't expect exactness out of it. But what it really helps you with is the expectation. If you're expecting it to get to a certain area, it's easier to stay in the trade and ignore the day-to-day back and forth when you know it should get to a certain area. It allows you to not get washed out of these whipsaw type days. All right, another one I like is, and this is getting into the energy, KOS. And this has, now today it's back down again, so, and it's an inside day. It could pull back a little bit here, so this is another one you might want to just kind of put in a watch list. But I like the fact that yesterday it broke out, and I like that chart of oil looking a little bit more bullish as it kind of works its way back up to the upper part of its sideways range there. You'd want to see it get back above that breakout area again. At the very least, but overall the trend is pretty nice. You look at the like a 2-year chart too. You can see why maybe it's right back down again. It's trying to break out of a new major high. This is a 2-year chart, but look at that kind of bowl-shaped move. It might take a little bit more to break out, but if it does, if you maybe just wait for it to break out again, the potential there, it could go top of the bowl, the bottom of the bowl, project that upward. Potentially a lot of upside. There's a lot of upside potential there on that chart if it can break out. And then one more. I'll have more on Thursday, but PARR is a refining stock. And again, kind of the same thing. It's trying to break out. And again, bearish candle today, but that looks like a corrective move right here, maybe an ABC. And again, so it broke out. It pulled back to the breakout area. It's kind of hovered along that. Now it's trying to break out again. The refining stocks are nice because the U.S. only has so much refining potential. We're maxing out our refineries right now, and with oil prices this high, it means that they are they're making a ton of money on the refining process, which again is negative for us because it means we're paying more for gas. But if you can make up what you're losing paying more for gas by making money on some of these oil stocks, then it can help you out a little bit. I like that longer term chart. You can see it's been pretty steady for months, and now it looks like it's breaking out again. Pretty good looking chart there. All right, that's all there was a question about, I wanted me to look at HIMS. Nice uptrend. I wouldn't chase that move though. I mean, anytime you get a big gap up and a big move like that, anytime it's looking like it's going parabolic or straight, You don't want to chase it, because is there a chance it could go higher from here? Well, let me show you the probabilities, and then you can make your decision. When you see a big jump up like that, the higher probability when you get a move like this, a sudden move like this, is that it will move sideways and consolidate that move, or pull back and fill in that gap. Even if it does go higher, it probably isn't going to go much higher before it either moves sideways or pulls back. So now there's always the chance that it takes off and has a big run, but I'm telling you, from a probability standpoint, that's very low that it's going to just rocket from there, or much lower than the other two probabilities. 2 out of 3 of the probabilities are that you're going to get some sort of consolidation or pullback. And then there's a half chance that maybe it goes a little bit higher and then pulls back and moves sideways. So you got about a 2.5 out of 3 chance of it not doing what you want it to do. So that's up to you now. Do you want to bet on the very small half chance that it goes higher, much higher from here, or do you wait? Obviously, it's made a move right here. Wait to see if it pulls back or consolidates a little bit. See what happened here. It gapped up right here out of this little range right here. And then what did it do? It went up a little bit further, but mostly moved sideways. If you look back here, if you bought on that big gap up right there, what did it do? It moved sideways. It consolidated for a month. What would have been better is if you did other trades during that month, and then when it consolidated, bought the breakout. That would have been, although it didn't go up much further before pulling back, but still, that would have been probably a better use of your money. I kind of see the same thing here. It's been trending in a nice direction, but you'd want to probably wait for that consolidation or pullback. All right. Have a great week, everyone. We'll see you Thursday, and we'll try to have more stocks in that stock-specific class to go over with you. And like I said, I'll have more information on what my week's going to look like next week as well. All right. Thanks, everyone. Have a great week. Bye now.